right, all right. What the heck is that? Remove that, start this. All right, here we go. How you doing this morning? I am excited and anxious to get started. I want to come in and look at the markets. I want to show you a few things. Did you know that the S&P 500 is made up of individual different sectors? Now, I know some of you knew that, but I'm betting that some of you kind of thought, well, I guess it probably is. Let's go look at them today. Everybody's excited about the S&P because it's been rocking and rolling, right? But we knew it was going to do this pretty much, kind of, right? We knew there was a third drive down there somewhere, possibility, but this is what the markets have been telling us that they're probably going to be doing, is that we're going to get a nice little head and shoulders bottom formation out of this thing, just like this. And we knew it was going to do that. Come on, land, draw it correctly. Here we do. You were drawing it correctly. Oh, okay. Like that. There we go. And that was our nice little natural trend line, right? Right across that head and shoulders. Now, we were talking about the fact that there's a possibility it could have gone down here and made a third drive down, but that's not traditional for a market that's in a bull trend. Only if a market's in a bear trend would it get that third drive down. So as long as the market's in a bull trend, we're just happy and dancing in the streets, right? This has always been a bull market. That's not a bear market. That's just a bull market retreat, right? Two drives back against a three drive. Of course, in this case, it was a four drive pattern up. 1, 2, 3, 4. But it would just merge that one. So it was really just kind of a drive 1, drive 2, drive 3. Where we go. Then we went through a distribution stage and down we went. And we had on the way down, we had drive 1, counter trend, drive 2. Now it was a little dramatic. I mean, it was like, it's like your high school girlfriend. But nonetheless, she still took you to the prom. All right. So she still went to the prom with you. So that's the way this baby's working. And so we just broke the high today. So we're still following all the rules. I'm going to ignore that one because that was that Donald Trump came in and messed that market up right there. Is everybody buy? And Donald Trump, you can't come in and mess up BlackRock's algorithm. You can't do that. It's not fair. You're not in control. You're not in control. BlackRock's in control. And if they don't want to go up right then they're not going to go up right then. They're going to do their thing and they're going to do their thing. And that's what they do, is they do their thing. Now, there's a couple things I want to show you here before we go in and start looking at the individual sectors. And that is what's going on here with the Gann fan. Gann fan, man, I haven't heard you talk about the Gann fan in a while. Well, we're going to take the Gann fan and we're going to draw the Gann fan from this very peak right up here. Okay. Let me make this screen just a little bit bigger. I get down here. That's good. That covers up that $2,000 drawdown that we're in right now. We'll cover that up. Okay, so we come down here. How are you guys today? All right, we're going to come down here, and we're going to come right up here to the very peak. We're going to start our Gann fan. Now, how we draw a Gann fan in track and trade is we put our little cursor right up there above the top, and you see I got my Gann fan picked. And I'm going to click down on the left mouse button and start to draw. And when I do that, you'll notice it goes all over the place. Oh, what the heck is wrong with the Gann fan? Oh, it's broken. And so you hold down the control key. All right. While you're doing this, you got your left mouse button pulled down. You're drawing this. Hit the control key on your keypad at the same time. So it takes two hands. So if you don't have two hands, get your daughter to come in and push the control key. Get your wife to come in, push the control key. Now, see that? It does what we call squares the Gann fan. All right, it squares it. So now you come in here and it's squaring it against the current scaling. All right. So if you come over here, you can move the chart around, but you can't rescale it. If you rescale it, it kind of screws it up. See, it goes like that. So we want to square it against the current trend, but that's all right. That's how it works. And then what we're going to do is we're going to come over here. And you can see the Gann fan comes down. It's a square, but it's got all these little lines coming out of it. See that? And if you notice, now I'm going to try and do something. I'm going to try and do something here. Let's see if we can make it work. So we're going to come in here at this little triangle tool, and we're going to draw the little triangle down. I did it first time. So right there between 2 to 1 on the upside and 1 to 2 on the downside. 1 to 2 on the upside. Oh, it's 2 to 1 right there. Okay, 2 to 1 on the upside right there, and 1 to 2 on the downside. So I'm going to draw that little triangle in there. See how I filled that in? That is what is considered to be a perfect trend. All right, as long as it's inside of there. Now, we got a little excited right here, and we went up above too high, went above a little too high. Not too much, Just came right up and bounced his head right off of it, came back down, came back up, bounced right off of it right here. And that was the Ganfan on the way down. All right. So it was a pretty strong market. It stayed above the 1x1, which is the 45-degree angle. All right. So that's remember, when you trade, you have to watch the geometry. Right? A lot of what we're doing here is geometry. Now, we learned geometry in high school. It's just a bunch of triangles and circles and squares. Who cares, right? Very easy stuff. Not hard at all. All right. So now you come down through here. This is the 45-degree angle. And it come right down through the center. And anytime the market's between 1 and 2, it's considered a perfect trend. If it goes too far up here, if it goes above that trend, well, it's getting a little bit too excited, a little bit too anxious. If it goes way down here, it's getting too anxious to the downside. And it's got to come, see, the idea is that this is like a rubber band, this 45-degree angle. It kind of pulls the market back into it. So if the market's coming down and it drops too fast and it's down in this region here, this is scary region, it comes here, then that means it's going to be pulled back up to here like that, right? Oh, scary region. Oh, it came down here too fast, too far, right? Scary region. Same with it going the other way. Comes down here. Well, if it goes up into here, oh, scary region. It's got flush back. Scary region. Come back down. But as long as it comes up here and it stays inside that 45, then you can consider it to be pretty much a normal trend. So if you notice this, although relatively long and very much like a fickle girlfriend, it was pretty much right inside that cone of probability, that Ganfan cone of probability. All right. That's pretty cool, right? So if we come in here and we delete all these and we come in and we do it the other way now, what can we project out into the future, land? Because we're futurists. Okay. So what we're going to do is we're going to come down to this exact same thing. Now, first of all, you can come in and you can draw your little trend line right up through there, right? And you can say, wow, that market's going right up that trend line with a little ABC pattern. Watch this. I'm going to come in with my little ABC tool, just like this. And we're right in here at the 61.8. Look, 90% is sitting right there. 100% is sitting right there. But there's another thing that we know, right? We also know markets have a tendency to do like 4 green bars. Let's turn off the bulls and bears. Look at that. We got 1, 2, 3, 4 nice, beautiful green bars. Now this one went 1, 2, 3, 4. Now this was a green bar because it closed higher, but it was smaller. Okay. Let's make this a little larger for you. Okay. See, the lower high had a lower high. This had a higher high, higher high, higher high. Now that one again, that was the Donald Trump day where Donald Trump got on there and said, everybody buy, everybody buy. So he did that one. So we're going to ignore that kind of funny thing. But this one here has a higher low. And then it comes down here. We got a little pullback, right? Remember, we're in a trend. We're always looking for the little pullback. Gives us an opportunity to get into the next drive. Well, here we go. So I said, watch out. The market's going up. Everybody's like, oh, no, I missed it. Well, don't worry about it. Be careful. It'll pull back. Well, I think it's going to do the same thing here. Okay, we got 1, 2, 3, 4. Now, could it go higher? Yeah, it could, because we got that Fibonacci projection in there. And the Fibonacci projection says we got 90 and 100 right up in here. So I say 90 because markets, rarely do 100% of everything you want them to do. Sometimes they're lazy. And so lazy markets. All right. So there's that one. There's 100. There's 90. Just expect it to come up to 90. So we do have that, but we also have 1, 2, 3, 4 green bars. And once we get 4 green bars, 1, 2, 3, 4, how many times has it done that? There's 1, 2, 3. 1, 2, 3, 4. Well, that was only 1, 2, 3, 4. And then these were lower highs. This one was a nice run. 1, 2, 3, 4, 5, 6, 7 green bars in a row. This is 2 green bars in a row. That's on a, let's come back here a little bit further. Look, there's 1, 2, 3, 4 big green bars. You didn't count the little one or the little tiny ones, but look at that. 1, 2, 3, 4 little tiny bars. Let's see. There's a little starter bar. 1, 2, 3, 4 before we made a lower high. Look at this. 1, 2, 3, 4, 5, 6. Well, then it went with a lower high. There's a nice one. Look at that. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. 11 bars. So it can do bigger bars. But we know that it's pretty common for it to do 2 or 3 bars and then turn around and give us a 1 or 2 small bars. So there's the possibility we get a couple extra bars up in here, but the odds are starting to get smaller and smaller, right, as that thing moves higher and higher. So what we're going to expect? Well, we're going to expect just a little pullback. Now, is it going to come back to this line here? Because that's still pretty aggressive. That's still a pretty aggressive line right there from that first trend to this trend, right? And that's how we check it. It's coming into a little wedge formation. Now, the problem with the wedge patterns, they generally drop out the bottom, don't they? So we may get that kind of a drop if this thing comes up in here. So you guys are all, oh no, I missed the bottom. I didn't get in. I've got my money sitting on the sidelines and I didn't buy in. And now I missed this big run and I don't dare get in because I might not. Oh, I'll wait for it to go a little higher. I'll wait and I'll buy higher. I like to buy high. Buy high, sell higher, lad. I like to buy low, sell high. It's a little easier to make money that way. It's hard to make money when you buy high and try and sell higher because you buy high and then nobody ever sells higher. That's the problem. Even when you buy low and you still don't sell. I'm never going to sell. Well, then you're never going to make any money. All right, you got to sell. All right. Now there's obviously situations where you shouldn't sell, and I understand that. But to buy low, sell high, you got to sell or else you don't make money. You don't bank it. Now, if you're going to play the long game, that's okay too. And you can do that. And you don't have to sell. But you're playing a longer game. All right. So as we come in here, what I wanted to do is I wanted to show you this wedge formation that we're coming into. We're kind of creating this little triangle pattern. I also wanted to show you the Gann fan going up the other side. All right, so here we go. Let's grab that Gann fan. We're going to draw it up like that. We're going to hit the control key, boom, just like that. And hey, what is that? Look at that. Almost perfect, like a train, like a train, like a train. I'm not going to say it. I'm not going to say it, Chad. All right, here we go. Let's get this thing back. We'll bring it down. I want to bring it down because I want to grab that line right there. And see how that line right there, if we put it along those two bottoms, that's where it is. But I'm going to put it right here on the 2 to 1. Look at how close that thing is to that 2 to 1. So we're right between the 1 to 2 and the 2 to 1 again. Let's draw our little triangle in here. So we're going to come in here. We'll just color that in with a color so you can see it. So there it is. That's the perfect trend, the 45-degree angle going right up. Now look at this. It got a little excited and a little anxious coming up this side right there. See, it went right up to 1 to 2, went a little higher, went up to 1 to 3. If it goes up to 1 to 3, it's got the rubber band. It's got to come back down. So it come back down into this region here. The rubber band pulled it down. It hit the bottom here, bounced off 2.1, starting to rally back up. It's got a little bit higher to go, but it's right up on that 1 to 1. That's the rubber band right there. Now it can go above it. It can go a little below it, but as long as it stays inside that little cone of probability, then we're in a perfect uptrend. Now, again, remember, we generally make 3 drives doing that, but this is also a triangle formation. So we got conflicting recurring price patterns. So if you get conflicting recurring price patterns, it's kind of an unknown. You're like, oh, it's a known unknown, right? It's a known unknown. We don't know what it's going to do, but we know that we've seen it in the past. And in the past, what has it done? Well, if we clean all this up again, in the past, what has this thing done? Well, it's coming into a little triangle wedge formation. And when it does that, it generally flushes out the bottom. Doesn't have to. Sometimes it breaks out the top, but we're coming into a decision point here. All right, it's called decision point trading. And so that's what we're looking at right now, coming into decision point trading. Now, if you missed your opportunity to get in, and you're like, oh, I missed it, I don't want to buy up here. Well, that was the right thought, because the thought is this thing's going to come down and probably check this point right here if it comes down. Now, it doesn't mean it has to, as long as it stays inside of that delta cone of probability. What the heck is wrong with my, oh, that's an arrow. Here, grab the right tool and your tools will work. All right. I hold down the control key again when I draw that tool, it makes it perfectly flat. Did you know that? All right, so now we got this little target point down here. So we come down, we grab that little tool, we go from here to here, back up to here, and that gives us the downside potential. There's 50% retracement, 61%. I believe we're going to get a little blow off. Now, we've also got that projection to the upside, so we do have a little bit more upside potential. Okay, so a little upside potential would bring us up into that 90, 100% region up in here somewhere. Now, I draw trend lines like as if it's a single line, but when we get like this, there's actually, you should be drawing these little drawings like this, because we got a little area of support or a little area of resistance. Remember, we've talked about that before too. So probably up in this little area right up in here is where we're going to get this topped out. So we'll probably, if it goes up in there, that's probably where it'll turn. If it doesn't make it quite up there, well, we'll get a turn. And where's it going to fall back down to? Well, generally speaking, it'll fall back down to this line here. Or it could just fall back down at least that trend line right there. But that's pretty sharp. It's pretty sharp. Remember, our Gann fan says it's got some more downside to go that can still be happy, not worry about it. So it can come all the way down to this line right here. All right. So So it can come down to that line and we'd still be within our happy line. All right, let's make that a nice bright color that we could see. Let's make it bright gold. We like gold. There you go. All right, so that's probably where we'll see it back down in this region here. If it breaks that, well, it'll probably come back down to this. Let's put a little, make that a bright red line. All right, make that a nice red line because these are the red lines. These are where the markets like to go to. All right. So these are numbers or places the markets like to go to and test if they continue to go. So those are our little upside potential. We got our little downside potential. We got our natural trend line right in there. On the GAN 2.1, we're going to just draw that gold line right in there and anticipate. We want to see it stay above that gold line. As long as it stays above that gold line, we're happy. And we got our little mountains in there. Remember our little mountains? We draw the little mountains in there as we go up this natural trend line. There's one little mountain. Now we're headed up and making another little mountain right up in here. Where's it going to go? Nobody knows, but we'll probably expect something like that, right? Some little mountain like that. Okay. So that's it. And then we'd make a third little mountain if everything stays copacetic. We want to see everything stay copacetic. That would be nice. All right. So we look for something like that. All right. So this is the top of that line, and that's where we'd want to see that test and break and come back down and test it. We'll probably get a little ABC in there out in here if that's how that plays. All right. So that's how we're going to look for it. But I think you're going to get an opportunity to buy low again here soon. It probably come down and break that gold line. Come back down here and just to piss everybody off and watch the news go apeshit crazy. And then you can buy down here. All right. Then you can buy right down in here. But LAN, is it going to go down and tank and come down here and follow this draft here and come all the way down here? Well, it certainly could. Certainly could. Now, I am a consummate bull. I don't think it's going to do that. Doesn't mean it can't do it, though. Certainly can. All right. So we could just be on a little uptrend, and then we get another little A, B, C down, and away we go into a bull market, into a bear market. Okay, but those are our probabilities. All right, let's go in and look at the individual. Now, did you guys know that the S&P is broke down into sectors? It's 500 stocks, but they're broke down into sectors. So I've got those pulled up here. I think, where is it? I think I got them here, right there. Look at this. All right, this is called the SPDR, Sector SPDRs. Sector SPDRs, that's the website. You can go look at them yourself. And this is actually a pretty cool website. So you kind of want to come and look at this. This is like, we always like to go look at the YieldMax Funds website, right? YieldMax has, we all, well, I don't want to say we all. Some of us trade YieldMax, right? So you go YieldMax ETFs, and it's got a cool website that we like to go to. And this tells you all about the YieldMax funds that we like to trade, right? And it gives us all this really cool information, and you can sit here and look at all the YieldMax funds. All right, so that's the YieldMax funds. We like to do that, but S&P has the same kind of website. So the S&P, you can come in here and you can look at all the sectors within the S&P. And it's a neat website. All right. It's got all kinds of really fun stuff. Look at this. Sector tracker, earnings calendars, all kinds of neat stuff. Okay. Now you can see each sector is broke down like real estate, financials, healthcare, industrials, consumer, discretionary, technology. Now that's not all of them. Oh, these are the earnings calendar. So earnings are coming in on Monday, April 28th, which is today. Wait, today's not Monday. Oh, it is Monday. Today is April 28th, Monday. So Monday, you're going to have these sectors are having earnings. All right. So then we come in here. Tuesday, then you got these sectors are having earnings. All right. So that's pretty cool. And it's got all that information in here for you. And then you got the sector tracker, today's performance. You can see how some of them are up, some of them are down, up and down, but you can see all the sectors. So now what's really cool is we can come in here and we can rotate through here. It's got all kinds of stuff. So this is just XLC. And then this one here is XLY. And then we come in here, this consumer staples XLP. And then this is energy XLE. And this is XLF, the financials, and the XLV, this is healthcare, XLI, industry, XLB is materials, XLRE is real estate. This is XLK, which is technology. Look how big the technology sector is. All right. So that's what's fun about this. Back over XLU, utilities, and then back to the beginning. All right. So what we're going to do is we're going to go in and we're going to put each one of these symbols into our software. Boom, boom, boom. XLE, XLU, XLK, XLB, et cetera, et cetera, et cetera. And when we do that, we come into our charts and we have a little sector in here called SPY sectors. And we go, boom, click the SPY sectors. And there you go. Now you got all kinds of fun charts that you can go and decorate up with all of your Fibonacci and GANFAN stuff. All right. So this is what this market's been doing. This is XLE, which is energy sector. So the energy sector has dropped quite significantly because the price of oil has dropped quite significantly. I would assume, right? I mean, that's a fair assumption. And so we come in here and we look at that. And so down it's come. Now, what's it going to do? Nobody knows. But is it going to come down and make a rebound or come down? A, B, C. We all know that this is a nice little sideways channel in here. So this is kind of a, well, we got our channel already drawn in there for us. So there's a nice channel coming across there. And that's our first drive down trend. So if we come in here, this is an X1S A1. And we all know that an X1S A1 is about 25% chance that that's the bottom, right? We all know the odds because you've been to this class before. So that thing has the odds are about 25% that that thing's going to continue to rise. Well, if we've only got 25% odds that that thing's going to continue to rise, maybe we want to put a put option in it. Doesn't mean it can't go up. It certainly can. And the rest of the market is going up. But this is the energy sector. So is it going to flush and come down and give us a one more? Nobody knows. But we're going to you play the odds. You come in here and you say, do I want some options? You come in here, you go option, and you come down here and you want a put option. And you say, I want an 18-day put option. It's $200. Is there any volume? Let's do this one here. 184, a lot more players in there. 16 and not very many. Oh, look at that one. Lots of people bought that put option. 302,000 today. Wow. Or 3,000, not 302,000. That's a lot. Why are they buying that? Look at this one here. That was before 117. Let's come in here and do one above that. So we're going to come in here and we're going to buy a put option. One above that, just above that 3,000. Because if it goes down and it comes back up and touches all those, it won't touch ours. We'll go up one more because it's got more up there. Yeah, let's buy that put right there. That's a little bit in the money. We could go a little bit out of the money. Costs us. Oh, that's a little bit in the money. That's the one we want right there. It's got 4 today, but 7,900. Look at all these. Ooh, 3,000 of them today. Buying puts. All right, we're going to come in here. And how many are we going to buy? 2, 3, 4, 5. That's $1,000. How many's 4? 900. A little above, a little below. 5's even. All right. Let's come in here and we're going to mark it into that. Just see if it'll mark it in. Come on. Come on. Give me my options. Edit. Let's see. 225 it says. It's asking to buy it. 236. There we go. All right. We got in. So there we go. We're 5 put options. So that market, 25% chance is going to go up, but 75% chance is going to go down. So we're going to take that X1S A1 to the short side with some put options. Is it going to go down? I don't know. The rest of the S&P is going up. So, but we're kind of at a decision point right there. We'll see. We'll see. It's a small risk, $1,000. Who knows? All right. We're going to come in here and go to XLB. Same thing. Ooh, look at the XLB. Man, that thing. Drive 1, counter trend. Drive 2, almost like a full reset. Did it full reset that thing? Look at that. Came all the way back into the Delta Kona probability right there. Went sideways forever. And got a big red arrow down. That's just a 2 drive down, rally back up. Now it's flushing again. What is this sector? Materials. Got a nice little drive down here. 1 little counter trend right here. And it flushed out the bottom of that thing. And then it come down again. Another big drive down. This is coming in Kind of with a nice little shelf right in here, isn't it? Nice little shelf. I don't know. What do you think that thing's going to do? Got a little counter trend right in there. It's coming with lower highs. Is it going to flush back is the question. How far back if it does come back? Fibonacci. Fibonacci. Let's put that right in there. Well, it says that it would come back to the delta cone, one standard deviation, be back in here. But how much higher does it have to go? Huh. 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 Come down to at least that 38.2. Down to here. And then back up, right? Who knows? Nobody knows. You going to buy a put option? I don't know. I don't know. We got some odds in our favor here. Come back down. Come out to a 53. Won't die as fast. The other one we did a shorty one, didn't we? Put option 53. We come down here. $200. Oh, look, nobody's trading it. There's a lot of open interest. Nobody's buying them today. Nobody's buying put options today. That's the day you want them, though, is when everybody's buying calls. Let's go over and look at the calls. How many people are buying calls today? Nobody. Nobody's buying any of those 43s. 3 people bought calls up there. 18. A lot of open interest in these things, but no buyers today. Puts. Come on, guys. Come on. $185. Do you want to buy a little short here, a little shorty, just a little pullback, just a little shorty play? Problem is stupid. Put options have a put option skew that is not very good. So if you're going to buy a put option, you want to put the delta in your favor. We'd have to come up to this one here, and there's no players. Well, there's that one. That one's a little deeper in the money. 379.5, delta 68. Let's buy that one. I don't want to sell it. Somebody else is buying it. That's a little deeper in the money. Delta 68 as opposed to delta 47. We don't want a delta 47. $264. I don't know, just for fun. Let's try it. Just for fun, 276, 276. We got to go up to 276. Ooh, that's a wide spread. $23. Let's come in here. Let's just buy 3 of them. Just to see what happens. All right, we're going to do it with a limit order. All right, we bought one a little bit in the money on that one. Try and put the delta in our favor a little bit. We just need it to fall a little bit in here. We'll take it off with with a, maybe a 15% return if it'll just kind of give us a little pullback in there. My goodness, hold on a second, losing my voice. Hold on. All right, let's try that. All right, so we got other sectors we can come and play into. We don't need to just sit here and play in them one at a time. Let's look at this one. Ooh, look at how pretty that baby is. Ooh, communications, down, up, all the way down. This is just almost like identical to the S&P, isn't it? Down, that thing's right up there. Ooh, hit the 90%er. That's too tasty right there. Let's go in here. We go to calls. No, we're going to go to puts. We could sell a call. That would even be more fun, wouldn't it? Let's do that. Let's come in here. We'll sell a 18-day 240. We'll come in here and we'll go a trade. Come in here. Oh, not a trade. Options. Let's come in here and we'll go, okay, 18 days. Let's try it. Let's try it. We'll sell up here. That's $75. There's right at 100. That's $112. Yeah, we're gonna have to put well, let's try it. Let's do it anyway. That's not very much money. Sell it right at, well, one more down then. 157. Okay. All right, 1, 2, let's do 3 of them. $400. And then we're going to come in here and we're going to buy a call. We got to buy a call too. Up here is a little protection. $30, $15, just to reduce the Yeah, that's not reducing that much. $47. And we got to do 3 of them. 2, 3. So that gives us $330, 36% return. That's a vertical spread. All right, we're going to sell that and collect some premium if it just falls back. Might be better to do this one than to buy puts, because the market might not just flush, and you need it to kind of flush with the puts. This one, all it needs to do is just stay below that red line, at that purple line, and it just needs to flush back a couple bars, and you'll make your money. All right, so we'll put that in there. And this one, how's it going to make us do it? Credit or spread it? Credit or spread it? Let's see. Let's go. Ooh, that's going to be a wide. Is it 85? That's going to be a lot of money. Ooh, I don't like that spread. Look how expensive those spreads are. That takes all of our money away. Ooh, spread's too wide. We can't do it. Can't do it. The volume's 0. Can't do it. Sorry, guys. Can't do that one. It would have been fun. Would have been fun, but there ain't no money in it. All right. Well, at least you're learning a little bit about the different sectors. Let's see if we'd have been right. All right. So we think that it's going to come up in here. We think we're going to turn and flush back down. Where's it going to come to? Just probably along that trend line, just like that. We got our first little mountain in here. And we got our second little mountain in here. And we just expect this little mountain to come back down in here somewhere. Maybe a little slower. I don't know. Like that. That little mountain can go a little higher. And it can come out in here. We can do all kinds of fun stuff. We don't know where it's going to go. 130.9. It could go way up there. Test this previous high way up here, just above 130.9. But we don't know. We're going to put it right in here at 100. We'll say maybe right in here. It's right at 90 right now. So we'll say maybe 100. Then we'll get this little pullback to the, like that. Maybe it'll just kind of drift a little sideways. That would be better. We like that. We don't like markets just go flush out. That scares everybody. All right. So XLB, that's Delta Kona probability. We're taking shorts on that one. XLC, there's no money in it. XL, let's go just, oh, hell, I don't want it. There's no money in it. Okay, we're looking for this one to flush backwards, right? Ooh, look at that one. That's the financials. So you think the banks and hedge funds the big banks are going to do well? Financials. Now you can see, you can go in and you can find out the individual stocks that are each one. So this is just an ETF, an exchange traded fund of the financials that is part of the S&P 500. You can find out what stocks are in each individual one. Now, sector ETFs. Let's come in here to find it. So we're looking at financials. Let's go to financials. And I think we can find holdings. There's all the individual stocks right there. See that? That's pretty cool. You got to admit, that's pretty cool. These are all the stocks that are inside of that ETF. So if you wanted to buy just the banking ETF, you just buy this baby right here, and then you're buying all these banks. Okay. And so technically speaking, you know how we have the, let's come back to all funds. You know how we have the Magnificent Seven, right? Well, let's go into the technology sector. And we'll come down, and this is an ETF of the technology sector of all the technology firms that are in the S&P 500. And you saw how big of the holdings were. This is the holdings of all of the tech firms that are in the S&P 500. So rather than just the Magnificent Seven, there's all these. So if you want to just go into Apple, Microsoft, Nvidia, Broadcom, Salesforce, if you think this is going to be a big movers of all these tech firms, right? All these great QCOM, Adobe, and AMD, Texas Instruments. You just buy this, right? This is kind of like the Qs. What's Qs? Well, the Qs are 100 of the biggest and best tech firms. Well, how many of this one have? Let's see. There's 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20. So there's 20 instead of the Magnificent Seven. There's the Magnificent 20. And notice in here, this is now they have Palantir. Palantir. We love Palantir, don't we? They're kind of a new upcoming company. Just barely got put into the S&P 500, and they're doing well. They're doing well. Let's go click on them. Here's Palantir. Palantir Technologies overview. This is the S&P 500 right here, the black line. And this is Palantir itself. Doing quite well, much better than the overall. So right now, the overall S&P 500 is up 6.61%, and Palantir is up 20.62%. All right, now we talked about Palantir and what they do. They're about, they said, I was watching a little bit more information on them yesterday, and the guy was like, well, we have about 50% of our businesses in the federal government. The other 50% is in the private sector. But the government is, that's one I think they're going to grow real big. They're working with the Pentagon to help them with what they do best, kill people. All right. So actually, they're big accounting. They're a big accounting part of the company too. So what happens is the Pentagon is so big. What does Palantir do? The Pentagon is so big that if they even want to know how many tanks they have, how many working tanks do we have? He said that that's a 2-week request to find out. It takes them 2 weeks to find out how many tanks they have, just to ask that question. Well, how many helicopters do we have? Oh, that's another 2 weeks, or how many, well, ships, there's probably a little bit easier because there's not as many, but how many ships do we have? It's probably another 2 weeks, right? Still have a lot of ships. So they said that the accounting on it is so bad that if they want to know how many ships they have or how many, he was using tanks as an example. He's how many tanks do they have? They have to go out and send a request to every single little department in the entire military, right? So all the different big departments, the Navy, the all the way across the Army, et cetera, and ask them, how many tanks do you guys have? And then they have to go out into each one of their little individual groups and find out how many tanks they have. And then they have to go down to their little individual groups and find out how many tanks they have. And it takes 2 weeks for all that information to come back to them. He says, we're trying to automate that so that you can come in and say, we have how many tanks, and boom, it'd come right up on a screen and tell them immediately, which makes sense, right? I mean, you'd think a big army like that would have, how many tanks do we have? We're going to look it up on the computer and there it is, but they don't. And so he says that that's what they're doing. So that's what Palantir does. They're doing the accounting. So what they can do is they say, oh, we want to go over and bomb Iran. So if they want to go bomb Iran, well, they have to know what assets they've got to do that type of a war, right? So then they can pull from all these different, but right now they can't. It's a 2-week thing. Do you have enough boats to go over here? Do you have any tanks? Do you have any missiles? Do you have any rockets? Do you have any this? So we can have a more efficient military killing machine. So then they can come in and they can do a better planning situation. So they can come in and say, well, we have all these assets, and they can plan, which you'd think they would be able to do, right? They can't do that. It's not computerized. So that's what Palantir is doing. They're computerizing it so they can pull all their assets together, and they have this system where they can figure out war plans and have a better idea of what things they have. That's not a bad thing, I guess. It's not a bad thing. So that's what they're doing. That's what Palantir does. And they're just getting into it. So I think they got a lot of room to grow because they've got the military contracts. The military loves them. Donald Trump loves them. Elon Musk loves them. Everybody loves them. So I think and that's part, if you want to just, be a part of Palantir, XLK. The reason I keep saying Palantir is because I got a lot of it. I bought some Palantir. Okay, let's come in and look at Broadcom, Salesforce. Let's go look at Salesforce. And we're going to look at Salesforce, how it's compared to the overall S&P. So the overall S&P is up 6%, and Broadcom or Salesforce is up 12%. All right. So if you look at that, you see that this sector outperforms the overall S&P. So you could come in and just go into that sector alone, technology sector, and there you go. Now you could this is kind of like investing in the very best of the QQQ, right? QQQ has 100, and we can do the same thing with the Qs. We can go in and see the individual groupings in the QQQ. Maybe we'll do that another day. But right now we're looking at the S&P. So we come in here and we can see that this is just the technology sector, which has a tendency to outperform, right? Outperform. Now, what would be fun to see how this sector performs against the QQQ, right? So we could come in here, go new. We're going to come in with a technology sectors. And we're going to come in and we're going to go okay. And we're going to go, oh, what was that symbol? Now I forgot it. XLK. That's LAN's short-term memory. XLK. So we pull up XLK, and then we pull up QQQ. We pull up MAGS. So these are all three focused against each other, right? So we're going to come in. Let's do this. And we'll close this down. And we'll bring them bigger. 1, 2, 3, 4, 5. 1, 2, 3, 4, 5. 1, 2, 3, 4, 5. Did I get them? Yep, I think that's pretty close. Oh, I might have to go one more. Yeah, one more on these two. All right. So there you go. Now what we're going to do is we're going to turn off the Donchian channels. Remove. We don't need all these indicators either. Let's just close those indicators down. And we're going to come in. We're going to remove Donchian channel here. And then what we're going to do is we're going to turn on moving averages. Let's see, moving averages. And we're going to come into our moving averages. We're going to turn off all the moving averages. We don't want any of these. We want 28. 28 simple moving average. Boom, just like that. And we're going to put that on all of them. Okay. So let's do the same thing here. Turn this one off, this one off, this one off. Man, isn't there a faster way? There is, but then it sets it for all of them, and I don't want that. I just want that for these three right now. Okay, how come that's not showing up? Moving averages. Oh, I didn't have moving averages. Bulls and bears, moving averages. Chart overlay, moving averages. There it is. Okay, now we do the same thing up here. So we come up here, chart overlays, moving averages. Yeah, chart overlays, moving averages. Turn off this, turn off this, turn off this, turn on this. 50, 28. Did I do 28 on all of them? I did. 28, 28, 28. Okay. All right. Now you can kind of see now what you do is you come in here. Now you can see they're all about the same. What's fun too is to come in here and put the SPY. And then we got to do the same thing to the SPY. Remove this. Kind of getting too many on here, but that's all right. We can see them still. Bring this down. Hey. Chart overlay. We'll turn the bulls and bears back on. I don't want all that. Oh, that's okay though. We got to go 1, 2, 3, 4, 5. Yeah. And then we got to go back to moving averages, chart overlay, moving averages. And I want to turn all these off on this one too. Turn on this one, turn it on 28. All right. Okay. Now we can see how they're all performing one with the other in comparison to the overall S&P. So that's pretty cool. We can move the S&P to the top as the king daddy, and then we got QQQ. Look at that. Boy, they are all right, like a train on rails, almost exactly the same. Wow, look at that. They are really tracking. Usually you'll see a little bit of a difference. You can go into individual stocks sometimes. These are all, this is how we check and see if an individual stock, how it's performing against the S&P. But these are all ETFs, and they're all technology ETFs. But you can see that they're all doing almost exactly the same thing. Look, we got a little change here, a little difference in the XLK. We got two reds and a green, and this will be green today. Wow, there's 4 yellows, 3 yellows, 3 yellows on mags. Man, those, of course, they're all the same thing, so they're just variations on a theme. That's pretty cool. Anyway, there you go. Those are all the technology firms against the S&P, against the Qs. So the S&P, the Qs, and then of course we can come over and we can compare them like this too. Watch this. We got Track and Trade doesn't do this. So if we want to do a little comparison, I like this little tool over here. You guys all know I like this little tool over here. We're going to come over here and we're going to go to this little tool. This is kind of a cool little tool. It's got some features that I like in it. So we go over to, we're going to go comparison. And we're going to put in SPY, QQQ. Oh, now I got, it was XLK. XLK, and MAGS. There you go. Look at that. That's starting out all at the same price level. And so look at the mags. Look at mags. Woo! We come down. Mags really excelled on that one, didn't it? And then you had the Qs, QQQ, which is the orange line. And then you have XL. Look, XLK. Oh, look at that. It's the lowest. It performed at 3.74%. Mags did 17, QQQ did 9, and SPY did 8. So over this last little while, the Mag 17 Mags did 17%. Wow. Versus the SPY at 8, Q's at 9, and XLK was only at 3. So there's some stocks in there. If you do more, it drags them down. That QQQ dragged down a little bit off of the Mags's, but Mags is at 17. Q's are at 9. Let's put just an individual in there. Let's put the PLTR. Put Palantir. There's Palantir in the last year. What do you think of that? Man, just slammed them all to the ground. That's Palantir. Let's go look at Apple, AAPL against those. Ooh, Apple. Apple's done 20%. Mags has done 17. So you'd have been a little bit better off just being an Apple by itself. Let's go look at Meta. Meta did 27%. Let's do AMZN. Amazon. Ooh, Amazon. That's one that's dragging things down to the toilet. Look at that. Amazon only did 4%. Amazon did 4. Mags did 17. XLK did 3.73. QQQ did 9.22. SPY did 8.18. I wonder how many they would let you put across there. Because you know what would be fun is to find out which ones of the XLK are dragging it down. You think that would be fun? I think it'd be fun. If we go over to, I don't know how many we could put in there though. We'd have to go over to here. We'd go to XLK and we'd come down here to the individual stocks. Oh, that's a chart. We don't want the chart. Where'd this thing go? It keeps jumping around on me. Overview. Just go back. Okay. Jumps all over the place. Holdings. Okay, holdings. There we go. Be careful. Be careful, Ann. All right. I'm going to take this and how am I going to get this out? All right. I'm pretty fast typist. Watch this. I'm going to take this off this screen. We're going to put this over here and we're going to put this in. We're going to create a new one and we're going to come in here and we're going to say, this is the technology sector. Okay. And we're going to, I'll just write them in here real fast. I'm pretty fast typist. PL, MSFT, NVDA, AVGO, CRM, PLTR, CSCO, ORCL, IBM, and OW. All right, that's the first window. All right, let's go to the next window. There's ACN, INTU, QCOM, ADBE, AMD, TXN, AMAT, PANW, CRWD, and ADI. All right, these are the ones that they've got in the S&P 500. All right, so we want to find out which ones are the hot stocks out of the S&P 500 technology stocks. We'll find out which ones are dragging it down. Should we find out which ones are dragging it down? All right, let's just come in and look through them real quick. That's Apple. Hold on, I can't see. Oh, grabbed the wrong screen. All right, are you guys still with me? All right, so that's Apple. Let's just rotate through them. Apple. Oh, Accenture. That's an opportunity to buy right there if I ever saw it. I don't know, guys. That's probably definitely one that's dragging it down. But man, call options. See what this is. See if there's any opportunities in this thing. Calls. Come on, center. $3,000 for a 1-year call. Ooh, $250. It's a 0.7% spread. That might be fun. The problem is volume on it is nothing. Let's go see the shorter volumes and see if anybody actually trades this thing with options. Not that one. This one. Nobody really trades it. I don't know if it'd be any fun or not. It's $297 though. Look at the spreads on that thing. $100 spreads. Yeah, this would be. I hate it when you have such a great opportunity and you can't trade it because the stupid volume on the options suck. Look at that spread, $100 against an $830 spread. That's 13% of your entire value is getting into the market. You've lost 13% just getting in, and then you got to get out. Don't forget. So yeah, probably about the same on the way out. So you're going to pay 26% of your value just getting in and out of the market. Pisses me off. How come we don't have more volume and options? I love trading options, but there's like 10 options, 10 stocks in the whole damn stock market that you can trade options on. There's just no volume anywhere. Can't find good volume. I'm exaggerating. There's probably more than 10, maybe 11 or 12. All right, let's go see what else we're doing here. That's a really good opportunity, though. That thing's dropped down or come down here. It's part of the S&P. The S&P is starting to rally. This thing is really suppressed. It's $200 share. We should just buy some shares, land. Just buy some shares. Nobody wants to buy shares. Who wants to buy shares? They're so damned expensive. That's $29,000 of our $100,000 in one stock. What are you going to do with that? 100 shares, just so you can sell a call against it. And you can't even sell the calls because there's no volume. All right, look at Adobe. Adobe's another one really good. Look at that. We should be buying Adobe. Any volume? Options? Come on, options. 300 days out. Oh, one smart guy. $5,000. How much are they on the short terms? Look at that. $465 on the spread. It's 9%. Anybody trade this? One or two people like to play Adobe on the. Look at this. This should be like 1,000 open interest and 100 volume at least right now. There's 5,000 of them here. That's in the money. 65. I don't want to do 65 in the money, so those were bought the other day. $60 spread, $45 spread. 3% in, 3% out. You're paying 6% in spread. And that's for 18 days. Man, they're proud of these things. They're not proud of them. They just know nobody's trading them. Look at this. Beautiful. Beautiful trade. Beautiful trade. Then we have to kick this over a little bit to get that slowed down on the second drive down. But it came right down into, look at that, 61.8, just a little bit past it right there. It's breaking right there right now. Oh my gosh. Makes you cry. I'm crying right now. Oh my gosh, that's so beautiful. Look at that. This we got a full 3-drive pattern down, didn't we? Look at that. Wow, look at that. That thing was in a bear market. Drive 1, counter trend. Drive 2, counter trend. Drive 3. That thing right there, man alive, that thing is an X3S A1. You know what an X3S A1 is? That's a 75%. You don't get much better than that. That's a 75% chance that's the bottom. Adobe. How do we make money on this thing? There's just no volume on the options. There's some people out here playing some of these in the monies deep in. That's 18 days. Why in the hell would you buy that? $45 on the spread. $80. Why would you do that? Why would you even bother? That's a why bother? That 66 people bought that thing today. They're just going to get their ass handed to them. I don't care. The market's going to have to explode like a Elon rocket ship to make that thing make money. Why would anybody buy that? I don't know. Not for 18 days. Your time decay is going to just destroy you, buddy. Man, that's pretty. Right straight out of the manual. The manual? What manual? Of course there's a manual. Wait, where's the manual? That's not the manual. Here's the manual. It's right out of the manual. Of course there's a manual. Stock Market Playbook of Strategies. Go search it. Lyon H. Turner on Amazon. All this stuff I'm doing is in the manual. 238-page workbook, 8.5 by 11. Flip it out on your desk and lay it down and read it and look just like that. It tells you exactly what to do and what all these odds are. It tells you all these X3S A1, 75%. It tells you all that stuff. It's in the manual. Go get the manual. You'll know this stuff. All right. Okay, here we go. Let's go to the next one. See if we can find one that's got some options volume on it. Not this one. ADI. Yeah. We don't like that one anyway. We don't really like this one. One straight big down day, just like that. Well, it's part of the S&P, and if it gets drug up with the rest of them, this is probably one of them that's dragging the S&P down. This is your little ABC pattern, right? We'll probably get a pull back down in there or something like that, and then another rally up. I would imagine. Not a very good one. Let's go on to applied AMAT, applied materials. Wait a second. How did we get applied materials in the technology sector of the S&P? That's kind of dumb, don't you think? Oh, that was the high right there. This is one that's probably dragging them down. But all of these are probably good opportunities because the overall S&P is rallying. But what's dragging it up? What's pulling it up? It's certainly not this one. The options on that are, no volume, but at least the spread isn't so bad. It's only a 0.2% spread. Let's go out a little farther. See what 1 year is doing. Nothing. 65 though. That's not bad. Applied materials. That would be almost worth it. We could probably put one of those in. I don't know. Its volume on it's just so low. But that's 300 days. Where's it going to be next year? This might be the opportunity of the century. How are they do out here? What are they doing? 53 days. Oh, look at the open interest on this thing. 200. Ooh, these things are smoking. Ooh, we can play this one. 326 days. Let's buy a couple of these. $7,000 worth. Let's do it. Let's do it. Let's do it. Should we do it? You want to go in the money a little bit? We got a little bit more volume down there. 2,075. No, let's do it right at the money. We'll have to wait. Okay, let's go. Let's put one of these on. Let's put one of these on. This is a lagger. It's got the volume's okay on it. Let's just see if it'll mark it in. It's not going to mark it in. Why bother trying? It's going to 25.45. Oh, 25.45. Oh, now it's starting to hurt. He's down here. Oh, look at that. Right when I want to do it, it said $50. Now it's $195. What are you guys doing to me? What are you doing to me? How can you go from $50 up to $195 in 1 second? No, I can't do it. All right, let's move along, little doggy. AMD's another one. Oh my gosh, look at this thing. Oh my gosh, what an opportunity. AMD. Oh, ooh. I'd rather do AMD anyway. Let's come in here and see if it'll let us have this one. 2185. Oh, yeah, baby. Look at this. Okay, let's do 3 of these. Oh, yeah. $6,000. Oh, yeah. Let's go up a little more. Let's do 5 of these. That's $10,000 in AMD. You want to do that much of a poor man's covered call on AMD? Oh, oh, 2190. 21. It keeps moving on me. Okay, take it. All right, we're going to play AMD. Broadcom. Look at that thing. All right, let's go a little faster here. Salesforce. Oh, baby. Look at that. Oh, baby. That's a 3 drive down. Drive 1, counter trend. Drive 2, counter trend. Drive 3. Oh, yeah, baby. Let's come in here and make some money with CRM. Has it got any volume? Usually it does. No, nothing. What are you guys doing? Well, 18 days has a little. What about 53 days? Oh, look at that. Open interest, 12,000. 92 up here. We need to have a little pullback day to buy this one. We go out 326 days. 105 debt. It's 0.3%. Oh, up here. I don't think they're going to let you have that one, though. And it says 0.1%, but I doubt it. 180, 65%, $65 here, 0.1%. You think they'll let us have that one? I doubt it. Watch and see. The minute we put it on there, they'll go, oh no. Wow. See? Went all the way up to 65 the minute I touched it. Still, it's only 1%. That's not bad. $5,000, 65%. Oh, yeah, baby. Let's see if we can get that. That's 0 volume, though. We would be the 1 volume if we could get them to take it. Salesforce. Okay. Let's get 3 of those. 5170. Oh, look at our spread. Let's do 1 first, just to see what it looks like. All the way up to 70. 5170 is where we have to go. That's $65. Oh, that's just what it said down there. Think they'll let us have it? We got 0 volume. Probably even the demo account. Oh, now I just went to 160. You rotten boogers. 5165. 160. It's 3%. 160 out of 5,000. I don't want that. I had a lot much better. 2, 3. It's going to cost us $500 to get into this thing, and we're going to pay $15,000. Let's just do 1. 5,000. See if they take it. They did. All right. CrowdStrike. Ooh. CrowdStrike's on fire. Look at that, baby. Already ripping and rocking and rolling. Cisco. Ooh, Cisco. 2 drives down at the bottom. Nobody's buying Cisco. 328 days out. Look at that one. What do you think? It's not very expensive. Spreads 0.4% though. Could come down here. 0.2%, 15. See if they'll actually let us have that. Probably not. Try it. They did. Come IBM. Do you want to own some IBM? Not with an option, buddy. Into it. And we're going to have to wait for that to pull back a little bit. Microsoft. Do you want to own some Microsoft at this level? Probably. Look at that thing. Drive 1, drive 2. Little bottoming thing here. Trade. Let's see. Options. 326 days. What's this one up here doing? Ooh, 200 days has a more. 300 days. It's a few less. What's the cost? The cost, a little bit less. Let's go 300 days. I like 300 days. I like a whole year. I like 1 year. Where do you think Microsoft is going to be in 1 year? Let's buy that one. Just should do one. Should we just do one? Okay. 45.17, 45.30. Run that baby up. 45.30. Place order. They give it to us? No. Why not? No, it went to 45. You rotten little booger. Okay. All right, we're gonna sell some premium against these. So don't freak out. Oh, look at that. Service now window. NVIDIA. Oh my goodness. 1. Counter trend. 2. Counter trend. 3. ABC. Options. 326 days. Oh, look at that, baby. 475 of these things today. We want to buy that. We go in deep in the money, 1 or 2 more. Bump. $10, 2,000. Yeah, let's do that one. Yeah, let's do that one. It's not calculating the spread. Oh, $10. I don't think that's going to give it to us. 25.10. Ooh. 2, 3, 4, 5. Place your order. Yeah, man, we got it. We got it. Look at that. 326 days in NVIDIA. Where do you think it's going to be next year? Oracle. Wow. Another opportunity of a lifetime. Wow, look at the spread on that thing. Let's go to PanW. Palantir. I've already got too much money in Palantir. Not in here, though. But look how far it's gone. Let's give it a little bit of a run back. Let's see if it won't. Let's put in our... What are we doing with Palantir? It's going right up there. Oh, it's reaching up pretty high. I think we get a little pullback here. 1, 2, 3, 4. I bought $100,000 worth of Palantir right there. You know what I'm feeling? I'm feeling pretty smart. You're smart when you're right that once or twice. All right. What about QCOM? A little late to the party. Ooh. What about Texas Instruments? Ooh, volume's nothing on this thing. How do they play normally? Not very good. 18 days. Nothing. We should have a lot more volume on this right now. We should have people buying the shit out of this right now. But they're not, so we won't either. All right, how are we doing over here? We've got 1, 2, 3, 4, 5 leaps. I think we'll stick with that right now. And we'll let them go a little bit. We could go put some calls against them if we wanted to. Maybe we'll do that next time. Okay, we kind of run out of time right now. We could come in here and start selling calls against them. Up in here, right? So we come in here, go to an 18-day, come in here, go to options, 18 days out, sell a call up in here. We could collect. Look at that. Look at that. $80. Way the heck up there. $134 right there. We'll just do one for right now. How many have we got? We got 5 of these things. We'll do 5 of them. 5. 600 bucks, 400 bucks. It's even a little safer. There's an extra 400 bucks. I could use an extra 400 bucks. How about you? $395 we just put in our pocket. We need to go through now and create spreadsheets for each one of these. Don't forget to do your spreadsheets, because if you don't do your spreadsheets, then you lose track. And if you lose track, then you get all pissed off and you don't know what you're doing and you don't know how much money you've made and you think you're just always losing money. When in reality, you're probably not losing money. So let's make sure we have our spreadsheets. So I'll go create spreadsheets for each one of these and we'll come back and we'll check this out again on Wednesday. But on Wednesday, we've also got to do our UBI portfolio. For those of you who are doing UBI with me, UBI portfolio. And also, Pit News Magazine is coming out this week. It's not supposed to come out till next week, first Monday of every month. But the first Monday of every month, that's a long time to wait. And I really want to get this magazine in your hands. So it'll probably come out on Thursday, which is 1, 2, 3, 4, 5 days early. I'll have you know. So we'll probably give it to you 5 days early. Pit News Magazine, what's that? Well, I'm glad you asked. Pit News Magazine is the club magazine. What club? This club. Our club magazine. Don't you guys know you're part of a club if you're part of this channel? All you have to do is join the channel, subscribe, and you're a member of the club. Of course, you have to pay for the magazine. But you get it for 50% off right now because I haven't changed the graphic. Because as soon as I change the graphic, it's going to go up in value, up in price. I'm not going to keep giving it for 50% off. I only do that because I'm too lazy to change the graphic. It's not that I'm too lazy. I'm too busy. Too busy to change the graphic. So I'm just keep letting it be 50% off. Bruce says 5 days early on the Pit News Magazine sounds good to me. Yes, sir, it does. We still got a lot of work to do. We're still in the middle of doing the audios. So the audios aren't done yet. So we still got a lot of work to do. Found a bug in one of the, not a bug, found a mention in one of the articles that didn't get mentioned. It wasn't that we did something wrong. So we left something out. And I was like, we really need to mention that in that article. Lan, you can't change the article. The whole damn magazine's already laid out. And you want to go start changing things right now? Yes, I do. Sorry, guys. Relay it out. Because you left something out. One of the articles that somebody wrote didn't mention something. I want it in there. If you're going to talk about that subject, you got to cover it in full. Make sure you get it all in there. Don't leave something out. That's why they call me editor-in-chief. Lan, you're supposed to edit it before we get it all laid out. I know, but that's the way the cookie crumbles when you're in the magazine business. All right, guys. So hopefully you'll go subscribe to Pit News Magazine. The software I'm using today, Track and Trade software. We use the live stocks version. We're going to do the UBI on Wednesday, but tomorrow we're going to do a little day trading. All right. Meet you tomorrow afternoon at Power Hour. We're going to do 777 again because we've been trying to do all these different kinds of things. And 777 is the one that just makes the money. So let's just go make some money tomorrow. We'll see if we can't have a little bit better luck. Rebound, exonerate ourselves from the last couple of times where we didn't have such good days. So tomorrow, Power Hour, that's my time, 1 o'clock in the afternoon, Mountain Standard Time. Make the change and adjustment for your time. And we'll see you then. If you guys have any questions, please let me know. And if you had fun today and you found any of this at all helpful, hit the thumbs up. I always like to see the little thumbs up. Subscribe if you haven't. Ring the little bell so you get notified when we're going to do another live show. And it's always live here. Very few recorded, pre-recorded, canned videos. We do things live, man. We do things live. All right. If you have any questions, let me know, and we'll catch you guys tomorrow. Take care.